Cooperation with promotional banks is indeed very important for the EIB in our efforts to deliver finance for jobs and growth. Synergies between the EIB group and the promotional institution can be envisaged across the entire project cycle. We, the EIB and the EIF, cooperate with the promotional banks in all these member states that have them. As for the product, it can be loans, it can be guarantees or other financial structures. It depends on the banks and on the purpose. We, of course, cooperated with these banks extensively before the FC was launched, and now also we did the framework of the FC. Indeed, without the co-investment by promotional banks, we would not be able to reach the catalyzed volume envisaged under the FC. The complementarity between the EIB's pan-European scope and the impact of the local promotional bank within the member states is a huge asset for the investment plan for Europe, and we must make best use of its full potential. The FC regulation foresees the possible contribution of national promotional banks on 3 levels. By contributing directly to FC in cash or with guarantees, by participating in investment platform as a sponsor or investor, and by participating in individual FC projects as the co-financier. Just as an example, we have recently approved a major agreement with the Italian CDP for a platform to jointly finance major infrastructure projects. Plus, of course, we cooperate with the promotional banks on the advisory. We have signed agreements with many MPBs on the provision of services in the framework of Advisory Hub. And let me mention some issues which would be discussed during this meeting. For instance, the issue of the public finances question. Whether the National Promotional Bank is a part of the public finances, whether the part of the state debt is an issue, and several countries is a different regulatory framework, and no common resolution on the side of the European Statistic Office, one thing. The other issue which I would like to raise, the state aid issue, which is always an important issue, whether the activity of the National Promotional Institution, which generally state-owned institution, is a part of the state aid. It's generally raised the state aid issues. So that's why the regulatory issue, which is not always the same in all the countries of the member states, is different. And I think the help of the Commission of the Regions, so in this case, would be very, very important to find the best solution, which is the best for the future, the implementation of the new investment plan, and of course, not only the new investment plan, but the general business of the bank, the international financial institution like us institution, but the cooperation with the other institutions too. Some countries have a different regulatory, and that's why, so the common accord, the common solution, it would be needed. One other important point, I think, is generally the same countries, all the countries, that so the regional presence of the national promotional institutions is not very strong, because generally the headquarters is only in the capital, and some regions not maybe some agencies, but cooperative partners from the banking sector, but no everyday presence in the regions or so-called in the business territory, which would be an important issue too. And by the way, it's important which are the client of the national promotional institution. If the client generally the state-owned companies or the municipalities partially owned by the state, you know, it's again raised the issue of the state aid problem. So one additional point is important. We discussed the regional cooperation, which sometimes mentioned the cross-border cooperation. Some national promotional institutions is prohibited any activity across the border. That is an additional point. And one additional point, some national promotional institution, it's a cooperative, not only the cooperative, it's generally in the same institutional framework with the export and import agency or an export and import bank, which role is sometimes different, but it's on the same institution. That is the case in several Central and Eastern European countries. I generally call them younger member states. And two additional points which are very general points. One, the risk-bearing capacity of these national promotional institutions, because it's owned by the state, and if you like, or somebody else like, to raise the capacity of these institutions, need more and more capital, which means the owner, which is generally the state, try to find a solution, how can they increase the capital? Because most of these companies is profitable, but not very profitable, because the target is not a profitability, but generally so only covering the cost and including the risk cost too. And by the way, is an important issue, the funding of this institution, because they use the state guarantee when they issue the bond, for instance, in the stock market or the money market. And using the state guarantee is an advantage in one hand, and the other hand, it's again the state aid problem in some countries. And by the way, the last, but not the last important point, so we are facing a new period when we would like to implement and introduce new financial product, a new financial instrument, using this national promotional institution, which is the new challenge for them, because it's a new product, new toolkit of the product, and the implementation of this is the challenge for the national promotional institution, for the government, and of course, all the countries too. Thank you very much, President.